Can cryptocurrencies become real money? Bitcoin is certainly separating itself from other cryptocurrencies as one of the most interesting stories of the latest years. And what we need to understand is what makes a currency money. Let's start from one important premise. Not all currencies are money. This is very important. The fact that a government issues a currency does not make it money. The fact that a government allows to pay taxes with a currency does not make it money. In order for a currency to be money, it has to comply with three main elements. Number one, it has to be a reserve of value. Number two, it has to be a means of payment of generalized use. And number three, it has to be a unit of measure. Reserve of value, unit of measure, and generalized mean of payment. The reality in the world is that there are more than 30 currencies issued by governments that are not reserve of value, unit of measure, or generalized mean of payment. In fact, they are not money. Therefore, that's a very important factor. It's also very important to understand that state-owned currencies disappear much faster than one would imagine. A lot of people think that the government never runs out of money because it can issue all that it requires, the MMT fallacy. The reality is that a lot of governments find that their currency ends up being a failed currency and therefore, no, they cannot issue more. Why? Because their currency is, at the end of the day, credit. And if there is no faith in the ability of the government to maintain the reserve of value, unit of measure, and generalized mean of payment elements of the currency, then the demand disappears. And it starts disappearing with the demand of the local citizens. In this table, what we see so far is which currencies have been worst relative to the US dollar, and which ones have been better. And this is another important factor, is that the world of currencies is a world of relatives. This doesn't mean that the dollar is getting stronger. It means that the local currencies are getting weaker. And if you look at the table, what you see is that even the Norwegian krona, which is supposedly backed by tremendous reserves of oil, etc., is a relatively weak currency. And that many others, as long as the government continues to destroy the purchasing power of the currency by spending units of currency that are not demanded by the real economy, it gets much worse. That's why Argentina needs to dollarize so quickly, because it's the evidence of a failed currency. There is no demand for that currency. So the fallacy of MMT is pretty obvious these days, no? A government cannot issue as much currency as it wants, even if it is monetarily sovereign. Why? Because sovereignty in monetary aspects is not provided by magic or by the government, but by the demand of the currency. And that demand can fall very, very quickly, even if the country is currently allegedly sovereign. The reality is that sovereignty in currency disappears as fast as governments become enthralled and believe this fallacy of the MMT. Let's look at the next graph, because it shows quite an interesting factor about the Bitcoin movement as a separate asset class relative to other cryptocurrencies. In the first 3 weeks of being implemented, the ETF of Bitcoin has become one of the largest ETFs in terms of flows and in terms of total volume of all asset classes. This is incredible. It's showing that there is an enormous level, the iShares Bitcoin Trust. All of those are showing that there is a tremendous level of demand of ETFs in Bitcoin. And that is providing a certain level of liquidity to a startup currency that is not yet a reserve of value, a unit of measure, and a generalized mean of payment, but is in the process of becoming one. The Bitcoin's Achilles heel was lack of liquidity. Precisely because of lack of liquidity, its extreme volatility generates problems in the Bitcoin world, predominantly among investors. However, those things are started to change, but we need to understand one thing. The fact that a currency or an asset has limited availability does not make it go up all the time in value. The big mistake that many people are making is to think that Bitcoin can only go up in price. And let's look at the next graph because it shows us precisely that. That peak that we saw in January of Bitcoin tells us exactly why the implementation of the ETF does not necessarily make the price only go up. A lot of people were looking at it as the catalyst for the price to go through the roof. I don't know where the price of Bitcoin is going to be relative to the US dollar. I don't care where the price of Bitcoin is going to be relative to the US dollar because it is a fake construct. It makes no sense to discuss Bitcoin relative to the US dollar, Bitcoin relative to the euro. To start with, because Bitcoin continues to strengthen, obviously relative to all of those weak currencies that are depreciating relative to the US dollar. And therefore, those that see a lot of volatility in the United States or in the euro area for Bitcoin, in many countries, they don't see that volatility. They see it as a good way of hedging against the destruction of the purchasing power of their domestic currency. So the construct of looking at Bitcoin relative to the US dollar doesn't worry me in the slightest. More importantly, Bitcoin is increasing the utilization where in the metaverse and in different aspects of the electronic and the parallel universes that we are seeing. So it's in a different scale than fiat currencies. I think that fiat currencies and Bitcoin will likely coexist in the future. But that doesn't tell me anything about the price. The price can only be dictated by whether the demand is going to continue to be as robust as we have seen in the previous months. Therefore, things that we need to understand. Number one, there is absolutely no truth in the idea that a monetarily, say, a sovereign country can issue all the currency that it needs without a problem. We have seen it even with the United States. The United States deficit is an absolute atrocity that will and continues to generate problems for the economy. Number two, it is absolutely clear that fiat currencies are not helping citizens to preserve their purchasing power of their salaries and their savings. Number three, Bitcoin is separating itself from the majority of cryptocurrencies as an asset class of its own, but it's still not reserve of value, unit of measure, and generalized mean of payment. Therefore, what we need to know is that volatility will continue, that implementation of an ETF is a very good way of improving the liquidity of the asset class, but it does not necessarily mean that the price is going to go through the roof. So we need to separate the implementation of Bitcoin as a currency, as an independent currency with its own use in its own universe, with the idea that it can only go up in price relative to the US dollar. I come back to the point, which is a completely fake construct. Fiat currencies and cryptocurrencies are likely to coexist in different universes. So, to end, Do not believe that massive deficits and massive money printing always generate wealth and improvement in the economy. Do not believe that governments can issue all the currency that they want and that they can incur in the deficits that they need when they are monetarily sovereign, because the reality is that more fiat currencies are becoming failed currencies. The latest one is likely to be Argentina's peso, and the reality is that the evidence shows that those deficits and that debt end up generating a massive destruction of the purchasing power of the currency. So 2 and 2 don't equal 22. There is absolutely no truth in the idea that an asset class will go up forever because of its limited availability, but there's also no truth whatsoever in the idea that government can issue all the currency that it wants without a problem. Keep defending freedom.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.